Hey, Courtney. Yeah, let's just start with that. The average rate on the 30-year fixed was hovering right around 3% at the start of January, near a record low. Now it's pushing 6%. Combine that with still fast rising home prices this spring, and affordability just tanked. Now, after an historic housing shortage, the number of active listings is finally rising, and fast. The latest read last week showed supply up 28% from a year ago, that according to Realtor.com. Now, that's a combination of new sellers trying probably to get in on the end of the red-hot housing market, and the fact that homes for sale are just sitting on the market longer. And that additional supply is putting an end to all those bidding wars, as sellers now have to come back to earth, as in, drop their asking prices. Some of the hottest work from anywhere markets of the pandemic are seeing the most sellers cut. Topping the list, Boise, Idaho, where over 61% of sellers slashed the prices in June. It was followed by Denver and Salt Lake City, rounding out the list of top 10 formerly red-hot markets like Seattle, Portland, and Tampa. These are cities where prices went really through the roof. Boise up 60% from pre-pandemic. Nationwide, prices are up close to 40% from March of 2020. And just one more quick change, a growing number of buyers are canceling deals on both new and existing homes that they agreed to buy, because they either no longer qualify for the mortgage or they see the market cooling and feel maybe they can get a better deal later on. Courtney?
Very fascinating. Diana, I want you to stay right there. The move in builder stocks, it's been a head scratcher a little as well. They've been beaten down for a while despite the pandemic boom. The XHB ETF is off 30% this year, but over the past month, it's up about 5%, outperforming the S&P. So are the builders bargains? Joining the discussion is UBS analyst John Lovallo. John, I know you were listening to Diana, and you know all the facts as well when it comes to factors that we point to saying this red-hot housing market is cooling off, but you're still pretty bullish overall. Why?
Okay, let's break it down. And I don't disagree with a lot of what Diana said. But look, home building stocks are trading with the specter of a significant decline in both volume and pricing. We just don't think it's going to happen. The stocks are trading at 4.5 times PE. They're trading at or below book value on our 23 numbers. So let's look at it in the most basic form, supply versus demand. Supply, Diana said that it's gone up. Yes, it has, but off of a very low level. There's 2.6 months of existing home supply in the market right now. The average is 6 months, right? And existing home supply is 90% of the supply. The supply that's out there is at higher price points. It's 44 years old. It's really not suitable for the first-time buyer. So that's the supply side. Let's look at demand. Demand is absolutely moderating, no question about it, but it's not dead. Mortgage rates have gone up about 230 basis points year to date, about 70 basis points in June alone. But listen to this. Google searches for June for new home sales were up 14% versus the average of the prior 8 Junes. That's pretty significant in a market where June mortgage rates went up by 70 basis points. Here's a couple other interesting tidbits. We have a housing intention survey for the second quarter, so it captures June, where we had that big rate move. 36% of respondents said that they intend to buy a home within the next 12 months. That is the third highest on record. Another thing, 42% of respondents said that owning a home is a great investment. That has never been surpassed in history. Finally, 47% said that they expect the value of their home to be higher in 12 months. That's only been surpassed twice. So the supply demand dynamics are not quite as draconian as you might think.
Very interesting points. I love when we can all look at data but actually see different things than the number. That sort of makes this interesting. Diana, I want to move back to you for a minute because, of course, you speak to a lot of the home builder CEOs and the executives. And what I've been finding in retail, which is the sector that I cover, is that while consumers are not yet showing their hand weakening, there's a lot of fear that they might. Is that what you're hearing from the home building CEOs?
Yeah, absolutely. And when you talk to the CEOs, they're very clear in their earnings reports that they're seeing a lot less demand and that they're starting to talk about more incentives and ways to really meet the price point of that buyers. And while I don't ever want to disagree with John, I would say that, yeah, the existing home supply is pretty high. But look at the supply of newly built homes. It jumped up really sharply, over 7 months supply. Now, just for everyone out there, a balanced market is generally 4 to 6 months supply. That's between buyer and seller. So if you're way above of that on the builders, it says to me, people aren't buying your homes. And while people may still think housing is a great investment, which it definitely is over the long term, if you look at the latest consumer sentiment numbers from Fannie Mae, which we just reported this week, it was a very low number of people who think it's a good time to buy a home right now. Now, that may change in 6 months if prices start to pull back, if interest rates kind of settle off, if the economy improves or some good thing comes in that makes them feel better about it. But right now, people are not feeling great about buying a house, and especially, it seems, buying new construction.
Okay, John, well, help us. If we're not going to buy a house, help us buy some stocks. Where do you see some areas of opportunity, whether it's a home builder, whether it's material? Maybe give us a little bit of both. You have a decent coverage list here.
Sure. Maybe just one point before that, though, the kind of the spike in new home sales or the volume on the market in terms of inventory. Builders had to build before they normally would have because supply took so long to get there. So there's a natural buildup that's going to be worked through. But in terms of the stocks, D.R. Horton is our top pick, biggest home builder by volume, by 30%. Entry-level focus, they have the size and scale to attract and retain labor, the size and scale to get deals on land and on materials. So we think they're best positioned. They're trading at about 4.5 times PE. They're trading right at book value, which in our opinion is a screaming buy. And I don't think you have to be super cute when you're buying the stocks here. I think you can go with the biggest and the best because the entire sector has been hit. So the second one would be Lennar.
Okay.
Lennar's trading in a similar range, but trading below book value, actually. They're the second biggest by volume. There's some optionality there. They're getting rid of some non-core businesses. So two very good opportunities in our view.